So we've been getting a lot of questions recently about Index Universal Life. And one of the most common questions that we get is, hey, Matt, Aaron, this thing looks great on paper. Why haven't I heard about this from my financial advisor? And so that's what we're going to be talking about today. Hey, it's Matthew Decker, Leverage Wealth Management, here with my business partner, Aaron Vincent. And today we're talking about why haven't you heard about Index Universal Life from your financial advisor? And Aaron, we get this question
all the time.
And there's quite a few reasons why you may not have heard about Index Universal Life Insurance from your investment advisor or your financial advisor. And we're just going to try to list some of them here today, just to provide some context around that really valid and great question.
Yeah.
So I'll just kind of start. And one of my kind of stock answers to most people when I get this question is my experience is most people find out about Index Universal Life when they're ready to find out about Index Universal Life. Mm-hmm. And so let me expand on what I mean by that. This product is not the right solution for everyone. And so if you're someone who's, looking to put in a couple $100s a month, or, a lot of people have huge student loans or revolving credit card debt, or, they don't have a lot of discretionary income coming in. For all those people, I would say
doesn't make sense.
It doesn't make sense. And therefore, hopefully they haven't heard about it. Because if they're hearing about it and yet it's going to put them in maybe not a great situation, right. I'm glad that those people haven't heard about it. I'll also say, it's also a really bad short-term vehicle. It may be the worst short-term vehicle in the world. That's just life insurance in general.
Right.
Maybe the worst short-term vehicle in the world. And so if you have a short-term mindset, if you're trying to save up for a house, if you're trying to save up to buy a car, this is not the right vehicle to do that in some kind of like short, 3 to 5 year timeline. But so Aaron in our office builds custom portfolios for high net worth individuals. And so I thought it would be interesting to get his perspective on why maybe this doesn't show up in the investment world as often as people might think it should.
Yeah, that's a great question. As you mentioned, we get this question often enough for there to be lots of different answers, and we don't have time to make a 3-hour-long video to get to all of them. But I think probably the most, starting off high level, the biggest or the most common reason why more investment advisors don't talk about this on a more consistent level is that they either don't have a thorough, holistic process, or they have a process that is so specific and so honed to what's in their wheelhouse, and it just excludes outside the box ideas like maybe building cash value in a life insurance policy. So I think I don't think anybody could argue from just a platform perspective that an IUL isn't a good tool for these kind of goals. No one could say that with any good evidence. So I don't think anybody would negate the idea, but I do think that it's skipped over so much because it's more work, and there's an extra level of effort and process and conversation, and even possibly education and training on the advisor's behalf to talk about it, efficiently.
Yep. One of the things that I wrote down was there's a lot of, when most people think of financial advisors or money managers, I would say just by nature of how this business is set up, most of those people that you would traditionally think about, they're probably located in either a bank or a wirehouse. Sure. And if you're located in a bank or a wirehouse, companies have to, in most cases, pay a fee to be kind of approved on their platform. And so a lot of these life insurance companies are simply not willing to pay a fee to be on like a bank or a wirehouse platform. And therefore, if you're working with an advisor who's with a bank or a wirehouse, there's a chance and there's a possibility that there's just a limited product offering because not every company kind of pays to play in that space. Is that an accurate description?
Absolutely. I'd even broaden the category to bank, wirehouse, and any big, and I won't name any names, but any of the big firms where the financial advisor is essentially just an employee of the firm. And I don't mean that in any sort of negative way. There's some good financial advisors that just are an employee of a bigger firm. But by nature of that firm getting to the huge scale that it is, they had a very specific goal and a very specific training for their advisors and a very specific or limited shelf of options to choose from to talk about.
And going one step further on that, in that space, the name of the game for those big firms is growing the assets that are managed, because in most cases, that is the only way that they get paid.
It's the only way they get paid. And we throw out the term cookie cutter a lot, kind of cliche even, but those firms are aiming at how many new people can we talk to and how quickly can we get those meetings in and out. And so therefore, let's make it as short as possible and as quick as possible and as focused as possible so as to increase the amount of activity going on, which really excludes and squelches any sort of outside the box or creative thinking to solve problems with different other than the mainstream ideas. And so it's an environment that isn't conducive to any kinds of ideas like this.
Yeah. I would also add that, it may seem like we're being harsh or we're like picking on people in those types of firms or those firms in general. And I don't want it to come across that we're doing that, because we're genuinely not. Aaron and I started in this business actually training independent financial advisors across the country on how to incorporate this as a tool into their practice. And a lot of our clients then were financial advisors, right? So a lot of our clients then, they didn't know about these types of products.
Our job existed because they didn't know.
Exactly.
We could train them where we were needed because it was such an outside the box idea.
And yet, most of them that we talked to loved it, ended up loving the idea and loving the concept, assuming that they still had access to the product, that they weren't in some kind of like employee captive relationship. But the ones, generally speaking, that we talk to, and when we explain, hey, here's where this does fit into the process, here's how this does fit into what you're doing, and here's how it's actually in the best interest of you and the client to layer in some safer dollars that are protected from future tax increases. That protects the family. It's a self-completing plan with a death benefit if something happens to the family. It makes so much sense that when we got the opportunity to explain how these things work to independent financial advisors across the country that maybe didn't have access to it or didn't know about it, we were very well received. And so if you're wondering, hey, why haven't I heard about this index universal life insurance thing? It's probably because someone like myself or Aaron hasn't gotten to your financial advisor yet to properly explain where it fits and how it works.
Yeah, that's great. I think another thing on a totally different angle is that the industry itself hasn't helped, because the talking heads out there, or a lot of the stuff you read, or lots of the resources available to a client in describing an investment firm or a financial advisory firm or whatever you want to call it, they are sort of judged or measured on a certain set of criteria. And that criteria is annual return.
Yep.
What did the market do? What did my portfolio do? And it's short term. It's what I can see right in front of me. I'm not saying that that's all bad. We shouldn't exclude that altogether. But a long-term tax-efficient vehicle isn't going to be necessarily one that has really impressive returns in year one or year two. It's a 8, 10, 15, 20-year kind of a plan. And so that advisor may be interested, or he may even, or she may be intrigued in getting trained in that, but they know because of the cards they're dealt in the seat that they sit in, they'll be judged in a completely separate set of criteria, and therefore it can't fit. And that's unfortunate.
Yeah. So those are some of the reasons that you may not have heard about an index universal life insurance policy from your financial advisor. If this is something that you want to learn more about and you feel like you can't find someone to give you straightforward, kind of to the point, honest, trustworthy advice, I'd encourage you to book a call with someone from our team where we can chat with you for 15 to 30 minutes, find out what your goals are, and we can chat about whether or not this is going to be something that's going to put you in a better position or potentially a worse position. It all depends on you and your goals and what type of discretionary income and what type of lifestyle you're looking to live. And we would love to have that conversation with you. I also want to say just a special thank you to all of our YouTube subscribers, because a lot of these conversations come from the comments that you guys leave in the comment section or emails that you send to us directly. So this is one of those scenarios. And I just want to say thank you for your input. Keep it coming, and we'll keep doing these videos. Till next time.